Hi, good afternoon. This is Roy Ribot, and this is my presentation for request for private letter ruling. Dear Sir or Madam, request for private letter ruling regarding James C. Kirk's liability under IRS Internal Revenue Code 6901 and Florida Statute 726-105. On behalf of our client James C. Kirk, we respectfully request a ruling that affirms that he is not liable for unpaid corporate taxes of Kirk Enterprises Inc. Kirk Enterprises Inc. under transferee liability or fraudulent conveyance. Further, we seek a confirmation that there are no penalties that apply under 6601, 6662, 6628, or 663. This is since Mr. Kirk lacked the constructive knowledge of any tax avoidance scheme and act in good faith under the standards set forth in Andrews versus United States 115 AFTR 2nd 2015 808 and Alterman versus Commissioner TC Memo 2015-231. A statement of facts, taxpayer information. James C. Kirk is a majority shareholder of Kirk Enterprises Inc., which is a corporation in Florida that engages in manufacturing. Kirk Enterprises Inc. has had a recent restructuring which involved a Medco transaction where its assets were sold to a third-party intermediary, Medco, before being transferred to an unrelated buyer. Kirk Enterprises Inc. assets were sold to Medco at a fair market value and the proceeds were distributed to shareholders after settling legitimate debts. Medco subsequently sold the assets to a buyer that Mr. Kirk had no control over Medco's action post-sale. Mr. Kirk obtained a tax rating advice that he was in compliance with Florida law and federal tax requirements. Kirk Enterprises Inc. was solvent prep and post-transaction and thus had no evidence of concealed assets or undervaluation. There were no red flags present as Medco were a registered entity with independent finances. We seek a ruling that Mr. Kirk is not liable as the transferee under Internal Revenue Code 6901 as he received no assets from Kirk Enterprises Inc. beyond his pro rata share of the sale proceeds. The transaction was not fraudulent conveyance under Florida Statute 726-105 mainly because it did not have the actual intent to hinder creditors and provide reasonable equivalent value. No penalties apply under 6601, 6662, 662A, or 663 since Mr. Kirk has sought for professional advice and there is no presence of willful neglect. Transfer liability, Internal Revenue Code 6901, requires proof of asset receipt on transferal insolvency. Commissioners versus Stern 357 U.S. 39 1958. Defenses under Andrew Shield taxpayer who lack knowledge of tax avoidance and act in good faith. Fraudulent conveyance. A transaction is fraudulent only if made with actual intent to hinder, delay, or defraud creditors. Alterman holds that arm's length sales for fair value are presumptively valid. Penalties. Under 662 or 6663, it is a requirement to have a proof of negligence or fraud which are not evident in this case due to the reliance of incompetent advice. United States versus Boyle 469 U.S. 241 1985. Fraudulent conveyance. The sale met all Alterman criteria, fair market value, public filings, and no creditor complaints. Florida Statute 726-105-1B exceptions apply. Kirk Enterprises Incorporated retains sufficient capital to cover known liabilities. Successor liability, Mr. Kirk received only shareholder distributions, not Kirk Enterprise Inc. assets. Kirk Enterprises Inc. was solvent post-sale debt to asset ratio 0.3. Under Andrew, his reliance on counsel precludes impute knowledge of any alleged tax deficiency. Penalties. Mr. Kirk's reliance on tax console negates 6662 reasonable cause exception. No evidence suggests willful disregard. As a conclusion, the IRS cannot sustain transfer liability or penalties against Mr. Kirk under the facts and governing law, which respectfully request a ruling to that effect. A power of attorney and supporting documents are enclosed. Sincerely, Tax Solutions Advisory Group.